All right, well, good morning, active traders, and welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun, your humble host, coming at you live from Colorado Springs here on a bright Saturday, September 17th, it looks like, 2022. Time flies. Well, what do you guys think about last week? It was pretty much a selling week, but the intraday was really tough because the ranges of the days were so compressed, except for Tuesday was easy money, right? Tuesday just slow darts at inverses or short the market, and that was easy. But Monday, Wednesday, Thursday, Friday, especially Wednesday and Friday, really narrow range days, especially yesterday, right? Very choppy, narrow range. Anyway, what's up for the markets? I'm still using 4,000 as key resistance, and we'll use 38. I would use right under that tail. Looks like the market tried to put a hammer in, right? That's a hammer. It's hammer time. Ba-da-da-bum, ba-dum, ba-dum. Hammer time here on Friday. So we have 3,900 as immediate resistance. 4,000 is kind of intermediate resistance. So that's R1 would be the hammer high right over 3,900. R2 I would use even 4,000, and R3 obviously up at 4,100. S1 would be down here at the 3,800. Okay. Big picture of the market, immediate trend is down because of the FedEx miss. Didn't help anything on Friday. We'll see what the market has to bring. A major support down at 3,700. So that's one thing to keep in the back of your mind. Major support at 3,700. Let's take a look at the VIX. Come on, VIX, light it up. Okay, let's move in. And see our VIX closed off where? Right near, it looks like right near 26.5. The VIX is still in bear territory, right? Remember, folks, the VIX anywhere over 22 is still suspiciously bearish, and so we do not want to buy stocks. At least I don't want to start swing trading until we clear. The VIX needs to get under 22 before I'm going to start swing trading much in terms of equities. I'm very bearish biased. Notice, please, and this is an important technical note that you would not get from the S&P chart. This is very valuable technique. The VIX is testing resistance, which means very, very bearish profile in the markets. VIX put in a new 3-week high or month high yesterday, right near 28.5. Right where I'm pointing, let's see. This data point is the most important point of everything out there. The VIX putting in a new monthly, or at least multi-month high, right, since July, right? So it's been 2 months since the VIX has been at 28.50. That's very significant for the markets. That's a very bearish indicator. So despite what talking heads may say, this market is poised for a epic sell-off, right? With the VIX testing a multi-month high. That's the most important thing you'll hear from me today, okay? The VIX is testing a multi-month high. That's very bearish for the stock market, being that the SIBO volatility index is a fear indicator, et cetera. And so obviously, I've been trading thousands of shares of UVXY and other inverses as they move. So the VIX testing resistance at 28.50, we'll just use that, or 29 is R1 and 26 is S1. So just yesterday's range, basically. I used 29. We want to, what that means to you as a trader is you want to buy more inverses like SQQQ, TZA, SOXS, and UVXS, the inverse instruments, if that VIX gets over the 29 and keeps going up. We want to be bullishly, or at least how to say, I would scale out of inverses if we lose 26, and we want to go into, we don't want to go, you can put on some tentative trades to the long side if the VIX gets down here under 24, but I'm using 22 as S1. So that's the most important intel. If you're one of my institutional clients, that's one thing I would say is stay clear of any large size longs unless VIX gets under 22, which is very unlikely to happen next week. We want to be bearishly inclined with this profile of the VIX. That's a strong VIX recovery pattern, right? Coming off the bullish engulfment down here near 20, and it moved all the way up here to 28 and 28.5. So that's important. That's a good note in terms of what's next. Let's take a look at some of these ETFs. Then we'll look at some intraday charts and swing trading charts. One thing I'm keen on doing is buying recovery patterns or bounces in the inverses that have been down, that came down from much higher. So this one went from 50 down to 20. This is the Bear Biotech, Lab D, right? our bear semiconductor. I like Soxel. It used to be pretty good for day trading, not much the last week or two, but SOXL is really good for a pivot because it's coming off support here near the 11-12 region. So I'm looking to scale into Soxel if it recovers and goes over the 13. One of my favorites. Excuse me. We cover this for both day and swing trades. It's KO. Excuse me, I'm losing my voice here. Get a throat lozenge here. I do so much broadcasting, sometimes I lose my voice. He talks too much. Hopefully that'll help. Okay, sorry about that. Anyway, KLD, our inverse natural gas ETF. When natural gas goes down, this goes up. When it goes up, it goes down, right? It came from 40 all the way down to 10. What I like about this pattern is it's holding support right near 9 or so, right? It's right under the 10, so it's holding support. I want to start scaling in if it breaks 14 and 16. So it's not promising yet, but KLD's one to keep on the radar for a commodity play for natural gas. What else? Oil play DRIP. Also on a bounce. I'm looking for exceptional charts here for you. Our short crude oil was up yesterday, and I bought a little bit into the close, but it's been kind of a sketchy pattern. If you look at the 1 year, it came down from much higher. So short crude oil is starting to move up after an extended move to the downside. Well, I don't want to scale into this on size until it breaks 30, so keep that one on the watch list. Trying to find some better charts for you guys here. Where's some exceptionally good charts? I don't see any yet. I day trade SQs daily. It's a good way to play the short side of the market, right? It's a short NASDAQ. So the two markets that exhibit weakness, the first are the small caps, the Russell. So we play the TZA, and technology with its multiples and all that with the Qs. So SQs has gone up nicely. It's not quite doubled, but it's gone at least 30 to 50. It's at 50-ish resistance right now. So I'm looking to scale in SQs if it comes up over the 51. Volatility's been suppressed. UVXY has been down for quite some time, but it's been slowly, steadily gaining speed since a month ago. Since mid-August, it's came off its 850 base. So I'm still after UVXY. I made some good money yesterday, but I was 1,500 shares long UVXY Thursday night in anticipation of the market selling down, and it did. So I sold pre-market before it dropped, so that was good. That's one thing too. If you're looking at trading some of these leverage ETFs, there's a lot of tips and tricks to the trade that you want to learn about, in my live room and from in the sessions that I do, and also my money show appearances. For example, UVXY. I never buy I always sell the gap up in UVXY and I buy the gap down. It's kind of opposite of equities because it's a volatility play. SOXS has been really good. Semiconductor short. Went from 34 to 56. Not quite doubled yet, but it's on its way. SOXS is also a good chart. Let's switch our attention over to some intraday charts here for just a second. What do you guys think about Adobe? Trade it or fade it? I'm looking for Adobe long if it recovers and stays over 300. Come on, Adobe. No, it's not filling up the chart there. Adobe had a little bit of buying toward then, but Adobe got slammed on Thursday, right? Going from 370 down to 300 here lately. Yesterday was right under the 300 waterline. What I like about Adobe for a potential swing or day trade next week is the fact that it didn't get under the 298 or so, or the 290. It's finding mostly it traveled around 295 up and down, give or take a couple of points most of the day. But that's could be bullish because it's failed to take out new lows. So Adobe was $700 a share, now it's 300. It could go down to 200 or 100, we don't know. But if Adobe comes back to life, anyone else trade Adobe? I tried to catch a couple of bounces, but without much luck. I mean, kind of scratch or small win or small stop. because it didn't move too much. But this one has lots of point range potential. So this is one I will be day trading again, in addition to yesterday, next week, because Adobe has big point range. I don't think I'm going to swing trade it. I don't trust it, but I will day trade it. Hey, John, how you doing, man? If you have any questions, type them in the chat. Wow, a lot of folks here. Hey, Matt, saying, how about using, say, a M2 candle length as a stop or M1? Yeah, that's reasonable. The main thing is to adjust your stop loss values based on the forward amount of time that you usually want to trade, right? Let me mention too, before I forget, do a little bit of business here. I do have the live room on sale now. It's a 2-for-1, a BOGO. You get 2 months for the price of one. It's just $247 for 2 months. That brings the price down to like $125, something like that a month. And it's a bargain because you get to work with me, 5 days a week. I'm there 8:30 till 11 each morning, and also at the end of the day between 3:30 and 4. And that we look for end of day squeeze plays and breakouts, as well as swing trading at the end of the day. So we have swing trading setups at the end of the day. We've got our day trading setups in the beginning from 8:30 till 11 o'clock. So a lot of time and a lot of coverage. It's currently on sale only till Friday, so less than a week. This week's special is 2 months, 2 months for the price of one. So it's only $247 for every 2 months, and you can lock in that rate to it. It's a subscription at that rate, and of course you can cancel if you want. But that's a bargain, right? It's only $125 a month, which is really good for working with me. I give you very specific entries ahead of time, right? That's what you can see all those numbers. Those are specific prices that I give traders where to look for an entry before it gets there. So you get a heads up of what's worth trading, where to enter, and also live I call out the exits and also re-entries and where to use stops and how to scale and all that kind of stuff. So give that some thought. It's at trademastery.com/special. And I'm going to wrap up today's event sooner rather than later. We've got a busy day ahead of me with family and all that. So we're going to make this a brief. I'm going to be done here in a few minutes. And look, no PowerPoints. Let me see. Looking at these charts here, really want to see which charts have the best volatility. And oftentimes, my members are so smart. I have so many smart traders like Mick and Ari and John and Steve and all the others. A lot of times their picks are better than mine. So I got really smart, well-trained traders as part of the Trading the Open group, and I'm very honored. It's my privilege to be working with people often have even better charts than I can pick. So it's a good, well-trained group of people that work together. My ADTX was a good volatility play. On the downside, AAOI, got an upside runner. We do cover the cheap charts, though they're not my favorites. To be honest, my favorite charts have always been between $15 and $30 a share. I don't really like trading things like Adobe at 300. I don't like trading things like this down at 3. The sweet spot that I like trading are things in the $15, $20, $30 share range. That's my specialty, just so you know. Here's another good example. TCRT, good volatility in this one. One of my traders had mentioned, let's see, like half these are from my members, right? Yeah, a trader mentioned this one into the close, ARI, SVC, REV. No, I don't like that one. But I do like Adobe. Anyways, I'm going to wrap up early here, folks. I'm sorry for cutting it short, but I've got a lot of new members to work with, and tons of paperwork and work on the website and all that. So anyway, I look forward to seeing you guys hopefully in the live room. And as we look for plays for the upcoming week ahead, one thing you want to pay attention to is, where's the volatility? If we're looking for charts that have good upside breakouts. And just so you know, by the way, personally, I tend to trade more ETFs nowadays, especially for swing trades, than I do regular stocks, because a few things. ETFs don't have major overnight gap risk. I mean, they may gap like this, up to $1, but you're not going to have a $5 adverse gap in an ETF. So you don't have overnight gap risk to the same degree as you do stocks, and they're more predictable in terms of the trading ranges. The day-over-day ranges tend to be predictable and easier to day trade. So we cover both stocks and ETFs each day, as you can see. Personally, though, when I'm trading each day, I trade more ETFs than I do stocks. I probably 70% ETFs, 30% stocks, if I had to hazard a guess there. I don't know how many of you folks trade ETFs. The leveraged ETFs provide spectacular opportunities for day trading. it's a much better intelligent way to trade, I think, than trying to trade the low float under $10 pop and drop $3 stocks that get halted and choppy all over the place. So they run up in the pre-market and then just sell off all day in the end market. I don't like junky cheap stocks. I like things that have actual, my goal is to get 50 to 80 cents. That's kind of like my round trip target for day trades, anywhere between 50 and 80 cents or so. And for stop losses, 10 to 20 cents. So at least a 3-to-1 risk reward. Let's see. John's asking, what size loss would I take on Adobe? I was just using $2 stops yesterday for day trade, just $2. For swing trade, you might have to give it $5 because the price is so high, but $2 for intraday. So that means I trade under 100 shares, and for swing trades, no more than say 4, maybe 5 points. Hey, Mira, Amgen, let's see. Hey, you too, Damon. Hey, thanks, Bill. Yeah, I wish I had more time, but it's busy times. Okay, I normally don't answer questions, but for you, I'll make the exception, Mira. Let's see, Amgen. Think of the sectors out there, for those of you looking for swing trades or longer term trades, I think healthcare, pharmaceuticals, defensive plays like food and utilities kind of thing, although not exciting, tend to be more predictable. I'm not trading stocks in this market, though. I think the market's going to have some trouble. Okay, Amgen sold off and bounced. I don't like it. The range isn't good enough. For $240 a share, even if we do play the bounce over 233, you'd have to pay $233 a share with only $5 of upside. The resistance target, if we play it, best case, you get 233 in out of 240. So that's a bigger bang for the buck elsewhere, I think. Now, for example, I prefer Occidental Petroleum on a recovery play over 70. If I had to pick something, right? OxyPete, Warren Buffett's good oil energy play up in new highs. So anyway, we got lots of charts to work with, and I will see you guys in our next session. I wanted to thank you all for being here very much, and I will be here for you next Saturday. And do be sure to check out my live room, and you get 2 months for just $247. You have my word; it's very effective, very in-depth, very detailed. I answer questions. We're friendly. We're focused. We're hopefully intelligent. And my win rate is, well, check for yourself what the percentage of winning alerts, entries, and exits I post for everybody. I won't say it's legendary, but it's very popular. So it's good to see so many of you here. All right, folks, take care. I want you to have a really good weekend. Stay safe. Trade safe next week. Remember, parting thought. Last week was a real difficult week to trade, except for Tuesday. Tuesday was easy money. Monday, Wednesday, Thursday, Friday had very narrow trading ranges, right? If you look at the spiders, look at the S&P. So last week was tough. Hopefully we'll have more volatility coming up this upcoming week. More days like last week, Tuesday, right? That was an easy money day. All right, you guys take care. Join, and again, that URL is trademastery.com/special. So visit www.trademastery.com/special and take a look. I did record part of a live session just a few weeks ago, and there's some instructional videos and other stuff on that page. So I built it out, put a lot of resources into it for you. All right, take care, guys. Have a good weekend. Trade safe, trade smart. Let's go get them. Take care. Bye for now.